consultation on infrastructure. I should have said that this will be recorded so we can pick up on things. My name's Derek Yule. I'm a SIPFA Council member and I chair the Task and Finish Group for Infrastructure Assets, which is a joint task and finish group of SIPFA LASAC and SIPFA's Accounting and Financial Reporting Forum. I'll be chairing today's event. As you'll appreciate, this is a complex and technical issue, which has led to proposals for changing the code, but also to assist local authorities. We have issued guidance to explain the proposals and also to assist in meeting reporting requirements. Today's webinar will be an opportunity to ask questions and give feedback on the impact of the issues. Just before we get started, a couple of pieces of housekeeping. Webinar will run for an hour. There'll be an explanatory introduction and context setting by two of our panelists, and then we'll be open to a question and answer session. The session will be conducted from questions that come up through the Q&A function. You'll see this on the toolbar at the bottom of your screens, so you should be able to see a button for Q&A. Please feel free to enter any questions here at any point during the webinar. Please use this as we're not intending to use the raise hand function. If you have any comments or observations, please feel free to use that question and answer facility. Your cameras have all been automatically turned off. Can you please make sure that your microphones are switched off, as it'll be easier for everybody to hear what the panelists are saying. So let me move on and introduce the panelists. We're joined by Conrad Hall, Sarah Sheen and Stephen Kane. Conrad has 20 years senior management experience in London local authorities, the last 10 of which have been in Chief Finance Officer roles. He trained with the Audit Commission, qualifying as a SIPFA accountant in 1998. There's a former winner of the Accountancy Age UK Accountant of the Year Award for his work in transforming Lambeth Council. He's currently the Corporate Director of Resources for Newham Council and chairs the SIPFA LASAC board. Sarah is a member of SIPFA's Policy and Technical team and specialises in standard setting, having worked in all the public sector and public benefit sorts. Sarah is leading on SIPFA's responses on the Redmond Review and local audit. Prior to working for SIPFA, Sarah was a national lead for PwC as a senior technical manager for the tertiary education sector and was seconded to the Welsh Government, where she was responsible for taking forward the local authorities' capital finance and accounting regulations and statutory guidance on local government investments. Sarah has worked in a number of roles for a major local authority in Wales. And finally, we come to Stephen Kane. Stephen is also a member of SIPFA's Policy and Technical team and provides the Secretariat to SIPFA LASAC. Before taking on that role, Stephen helped develop SIPFA's view and response for proposals and new standards being consulted by other standard setters in the UK and internationally, including financial reporting standards such as IFRS and IPSAS, and account auditing standards and guidance such as International Standards on Auditing and Practice Note 10. Stephen trained at the National Audit Office and also spent 3 years at HM Treasury as an accounting advisor. I'm going to hand over now to Conrad, who will set the context for this consultation. He will then hand over to Sarah, who will take you through the content of the consultation, covering the range of issues considered by SIPFA LASAC, its deliberations, and the proposals that it wishes to explore through this consultation. And then finally, we will come to the Q&A session, of which all our panelists will participate. Thanks, Conrad. If I can hand over to you now.
Thanks very much for that, Derek, and good afternoon, everybody. It's great to see so many people on the call. I think we're north of 200 already, and one or two more joining even as I speak. So I'm glad that we've got so many people here, and I am glad actually that we're using this format for a kind of more engaging approach to tricky issues like this. I think about this. I was sort of almost tempted to start by kind of trying to make some sort of joke, or at least lighten the mood a bit by sort of wondering what the collective noun for a group of extraordinary consultations is, because of course by definition this is something that should happen only very, very rarely, and it will not have escaped anyone's notice that this is the second such in a very short space of time. But really, I wanted to take the chance here to actually to underline the seriousness of where we are. I mean, you know, everyone knows the issues in local authority financial reporting and, you know, accounting and signing of the statements thereof. You know, and that, you know, as at Christmas or January when this particular issue came to light, I think we'd got close to half of the accounts being signed off and audited, which means that half or thereabouts hadn't been, despite you know, being months after the statutory deadline by that point. And of course, since then, I'm not actually aware that any further accounts were signed off. If there were any, a very small number indeed, and that does undermine our credibility as a sector. And again, when I use the word sector, I think it's important to emphasise, you know, I'm certainly not attributing, you know, blame or anything like that in any of this. I use sector in the widest sense to talk about local authorities, their auditors, regulators. You know, it's the whole system that really matters here. You know, in a situation where we're unable to move forward and have you know, half of the local authority accounts simply remaining in limbo is of course simply not tenable. And so once the issue was raised, you know, as quickly as we possibly could, you know, we convened the relevant, you know, experts from local authorities and their auditors and others, and have come up with what we think is an approach that strikes the right balance. So, you know, to be completely clear, you know, we should, in my very strong view, you know, always maintain the importance of adhering to accounting standards. You know, as soon as we start sort of moving away from that, we're really undermining the credibility of the sector in the short term and the long term. But that will nonetheless enable us to move beyond the current impasse, and so that firms you know, will once again be confident that they can sign off accounts as compliant with the code. You know, where, you know, proper reasonable efforts have been made. I mean, you know, I don't know the situation as individual authorities, but what we're not trying to do and would never try to do is to condone situations where there has been perhaps, you know, poor practice or poor accounting records maintained. What we are very keen to do is to ensure that where authorities have taken reasonable steps to record and value their highways infrastructure asset, that they're not left in this kind of limbo. It is a complex subject. I think everyone will know and appreciate that. We think that the approach that we have set out meets those reasonable concerns that will be raised about it, and strikes that right balance. But of course, part of the point of this webinar is to share all that directly with you, and to hear from you on either concerns you may have about it or issues that you think we haven't quite dealt with that can be dealt with through this consultation process. I hope we've got the balance right, but you know, with your contributions, and there's over 200 of you on the call, you know, we will be able to iron out any of those particular details. Let me pause at that point then. I think it is, you know, much more important that you really hear from Sarah and then from Stephen, who are the experts in this area. So they'll run through the material and then we'll move into the Q&A session. But thank you again, so many of you, well over 200 now, for taking the time out of your busy schedules to attend this afternoon. Thanks very much. And if I could hand over to Sarah.
Thank you, Conrad. Can everybody see this? Can everybody see the slides?
Yeah, I can see them, Sarah.
Brilliant,
Sure,
thank you, Conrad. So I'm going to try and go through this quite quickly, so to give as much time as we can, but it is a complex subject, as Conrad mentioned. And we're going to look at a number of areas today. And because it's complex, we do have to look at what the issue is. So we're going to look at what the issues we're looking at, what we're trying to assist with, and primarily relating to the transactions for derecognition when replacement expenditures takes place. We'll then look at the objectives for the Task and Finish Group, which Derek is chair of, and we'll consider the deliberations of the Task and Finish Group to date and why we've gone for a temporary solution. We'll then look at guidance and have a forward look for things that we think that need to be looked at in terms of our future solutions. And also, it's whether there are any other infrastructure assets that might come into this gambit. So just to go back on a bit of a recap, if I might, so everybody is on the same page. And I'm having to do it. It's not often I've gone back in historical records, but it's not often I have to go this far back. So our first probable issue is that it might be 1996 for Wales, and I'm from Wales, so I know that. But the issue originates from the remove to resource accounting, and that's in 1994. And what happened there was what we recorded as infrastructure assets and assets as general was undischarged capital balances. Infrastructure assets are inalienable assets, and I'll talk about that in a bit more in a couple of slides' time. But generally, you can't do anything much more than the function that they are there to do, i.e. to be roads or to be bridges. So they can't be sold or moved on. And that is some of the issue as well. Accounting for infrastructure in local government has not historically been seen to be an area of significant audit risk due to the nature of those inalienable assets and the use of a modified depreciated historical cost basis of accounting. However, concerns were raised by a local government auditor that some authorities are not applying component accounting requirements appropriately. I would note that this position has been in place since at least the last 28 years, or 22 years, 6 years for Wales, but it's certainly been in place since the move to IFRS basis of accounts. As I said, however, concerns were raised by a local government auditor that some authorities weren't applying the derecognition requirements for when expenditure takes place, which is replacement expenditure, appropriately. And that was looked at by the NEO's local government network of auditors. And it stifles understanding that the initial underlying issues appeared now to be more prevalent than first thought. And CIPLASAC now understands this as an area of focus for all audit firms. So as I said, infrastructure assets were brought onto the balance sheet in the 1990s at the undischarged capital amount. The undischarged capital amount was at that time deemed to be at historical cost. So the starting point has always been modified historical cost. I think that might have sort of failed in sort of corporate memories over time. At the time, it was deemed not to be useful to apply current value accounting to inalienable assets because, as I said, you can't do anything with the assets other than be roads or bridges. So since then, many unitary authorities or other types of authorities, when they've gone through local government reorganisation, the assets have been transferred over, and we understand that very regularly that these transfers, it was not clear, it's just one large block of cost, it wasn't or assets, it's not clear whether these balances represented roads or structures, so what parts of the network they would have represented. So the ability to de-recognise parts of an asset which is replaced is standard practices. I'm sure everybody's aware, but it's always useful to remind ourselves of these things. For most other items of property, plant, and equipment assets, we think it might not generally be being implemented for infrastructure assets, particularly high-risk assets, because of the variety of significant practical difficulties in applying that standard approach. This is particularly difficult in relation to roads or bridges because engineering records that are useful for maintenance of roads and networks, the identification of replacement expenditure and the new expenditure, they haven't been created to identify components that can be de-recognised. Infrastructure assets are one of the few categories of property, plant, equipment that continues to use the modified cost of historical cost accounting rather than the current value asset measurement basis. In 2015, we did try and look at this, and I'm sure everybody remembers the debates that were had on that area. But at that time in 2015, it was deemed to be too costly, and therefore, in terms of the benefits that local authority stakeholders and users of the accounts would be able to get from the information that was developed. So therefore, infrastructure assets remained held on the balance sheets at depreciated historical cost, the net of gross historical cost and accumulated depreciation. But that was still, just as a reminder, in a modified form of historical cost. Although not explicitly in the code, local authorities are generally, following on from the high-risk network asset, adopted a network model for measuring depreciated historical cost. A typical model will operate by adding new expenditure to the brought forward balance and then by deducting depreciation. Replaced parts are generally assumed to be fully depreciated, and their derecognition requires no adjustment to the net amounts. Not the same for gross historical costs and accumulated depreciation, though. The code is and generally has been applied in such a way that the carrying amount of the replaced part of the asset is derecognized at a zero amount, where expenditure has taken place to renew any part of the infrastructure asset. This fits into the economic model, which I'll talk about more, but because local authorities haven't had any more resources to be able to replace expenditure until the parts are worn out. Problems also arise because of the information deficits, where there is a replacement expenditure. When the asset or part thereof is derecognized, we are 28 years into the system, and there are many questions as to whether the balances that are being derecognized actually exist, or if they do exist, how much relates to the asset that is currently being replaced. So we also have been looking at the usefulness of information, and normally useful financial information for property, plant, and equipment is at current value. And so there are questions around how useful this information would be. So we have established a task and finish group, and that's chaired by Derek. It is our understanding that, as was mentioned, that accounts have been substantially delayed, and there's a significant risk of widespread qualifications if this issue isn't resolved. So in early April, we established the task and finish group with members of SIPFL-ASAC and the Accounting and Financial Reporting Forum to assist with the resolution of the issue, and other cooperative members, and we are very grateful to all those members for the time they spent on doing this. The group's terms of reference, though, were clear that the cost of any of the changes should be commensurate with the benefits that the users of the financial statements should receive from the information that's being produced. The group's terms of reference were intended to consider whether there needed to be any changes to the code to assist in resolution, and or whether any guidance from SIPFL might help in the resolution. Specifically, the code may need to confirm in detail how the code would best apply local authority infrastructure asset information. And we are, as I will talk in more detail about, getting to the position of producing a draft bulletin. So what were the deliberations of the task and finish group? Just to pick up on what's an infrastructure asset. Infrastructure assets are inalienable. Well, I think I should have found a better word for that, but they are inalienable assets. Expenditure on which is only recoverable by continued use of the asset, i.e. there's no prospect of sale or alternative use. You can't dig them up and do anything else. There are arguments that there may be scrap value, but the value is nowhere near the value that local authorities have and spent on them to produce these assets. They are often assets that are part of a continuous network that is maintained in a relatively steady state, though there may be distinctive parts of that network, and I'm sure you all remember them from your high-risk network asset days, but carriageways, structures, like bridges, culverts, etc., street lighting, street furniture, and traffic management systems. And they are assets with very long, useful lives. The task and finish group for infrastructure assets, which I'll now continue with group, otherwise we'll never get to the end of this, considered that the current situation, whether it would be possible to resolve the information deficits and improve the reporting of gross historical costs and accumulated depreciation. The group considered this as very complex to resolve. Arguably, information deficits for the 1990s and the initial recognition can be resolved by proper description. More difficult to resolve the information deficits from transferred balances on things like local reorganization. But the group did generally agree that the net book value should be able to be relied upon if, and this is the if, depreciation policies had been effective. The group also questioned the usefulness of reporting gross historical cost and the information deficits. The group noted that the majority of items of property, plant, and equipment are reported at current value, as this is deemed to be useful for operational economic decisions that the users of the accounts might take useful information from for stewardship and accountability. The group focused on the usefulness of gross historical costs and accumulated depreciation. Firstly, gross historical costs, bearing in mind the information deficits, might be described, and this is quite complex, as the amount spent to acquire the assets currently held by the authority. This would be net of revenue contributions and capital receipts and capital grants applied before 94 or 96, but not afterwards. But it was excluding infrastructure assets constructed before the authority's creation and including expenditure on assets which some authorities have never owned or no longer owns, but for which it took on financial responsibilities for some of the transferred assets. So all that leads to the fact that it's actually not very meaningful information, gross historical cost and cumulative depreciation. To find a solution, the group considers and continues to consider a number of options, including an amnesty on recorded information, a form of a reset, providing, for example, an estimate of gross historical cost and cumulative depreciation, or there are other options for resets, as of the earliest opening balance for where accounts have not been audited, and moving to accounting for transport infrastructure assets, potentially by formally accounting for this as a high-risk network asset. I would note and underline here, and this was probably brought out by Conrad, that the formal amnesty was not supported by SIPFA-LASAC. All options have both advantages and disadvantages, but where we're looking here is particularly at the potential of unintended consequences. And as a result, the group were of the view that the short urgent consultation, as permitted by SIPFA-LASAC's terms of reference, may not be able to identify all the options for solution, and therefore that could be very difficult. So the group, and also the other thing that meant that we haven't gone for a permanent solution is that the Treasury is looking at a thematic review of operational property, plant and equipment in the public sector, and any longer term proposals should wait the outcomes of this review. SIPFA-LASAC's objective, as Conrad said, is to maintain high quality financial information in local authority financial systems. So supports the aim of the group looking at a cost benefit analysis for the information it's trying to provide. And would also be very, very concerned to avoid unintended consequences. It therefore agrees with the recommendations of the group. So there are in the consultation 3 solutions, temporary solutions to the current situation. To be explicit in the code about the network approach and to introduce an adaptation within the derecognition provisions of the code that for parts of the network, the replacement expenditure takes place, the net book value move is at 0. And to at least temporarily remove the requirement to report gross historical cost and cumulative depreciation, and to include more guidance, indicative guidance about the approach to depreciation in the code to support accounts preparers. So looking at the first of those solutions, and apologies to the reference, but I'll do this quite slow. So paragraph 4.1.2.51 of the code is and has been applied in such a way that the carrying amount of the replaced or restored part of the asset is derecognized at a nil amount where expenditure has taken place to renew or replace any part of the infrastructure asset. This is actually consistent with the approach previously consulted on by SIPFA-LASAC when we were moving towards the high-risk network asset, i.e. that local authorities to a material extent only replace parts of the infrastructure assets when they've been fully consumed. And at that time, we were looking at a rebuttable presumption, but not for this temporary solution. This fits, as I said, with the economic model because authorities have not had sufficient resources to do anything other than undertake replacement or renewal expenditure when parts of the assets are worn out. Even though some of the replacement expenditure simply covers the service of the asset, this means the same economic position as a replacement for the asset underneath is either now impaired or forms a part of the new expenditure. And so no derecognition is required or is able to be measured. It's also appropriate for the rare occurrences that an asset is impaired, e.g. where expenditure on replacement has been deemed to be subject to defect and must be replaced, which does sometimes happen, but not very regularly. This is because the impairment measurement provisions are inappropriate for infrastructure assets, as valuing use is the present value of the asset's remaining service potential, and valuing use is likely to be significantly more than depreciated historical cost. And a colleague on one of the groups said, but that means they're not impaired. Precisely, they might not be impaired in accounting terms, but you can look at these assets and they might be physically impaired. And so therefore, the impairment provisions aren't accommodated by this model. A temporary interpretation could have been used and was originally intended to be used to confirm this position. However, some auditors have indicated that depreciation may not have been effective for some assets. So for the avoidance of doubt, this commentary in paragraph 4.1.2.51 is proposed as an adaptation, and this will support the assumption that derecognition has and has always taken place at zero amounts, even where depreciation policies may not have been effective. It is believed that this is sufficient to support current approaches and previous approaches and allows for alternative treatment. But the consultation seeks stakeholders' views on that matter. So now moving on to depreciation. I'm sure, I apologies for teaching the grandmother to suck eggs, as they say, everybody knows what depreciation is. But just to run through it very quickly, the code prescribes that depreciation charge is based on the depreciable amount allocated over the useful life of the asset. So using what is required is that the depreciation method reflects the pattern of the asset's future economic benefits or service potential to expected to be consumed. For infrastructure assets, I'm sure you're aware this is more difficult, as these take the form of network assets. And there are many different components, and it works as a part of a continuous steady state network. The consultation is intended to assist with this and includes new provisions and guidance for the approach to depreciation of infrastructure assets. It's quite lightweight in the code, and we're happy to look at any other more detailed proposals, but we think that the code doesn't need to say much more at the moment, that for infrastructure assets, a weighted average useful life of its relative parts may be appropriate to reflect its pattern. It might be the case that the draft provisions will confirm the suitability of the estimation basis already developed by a code and are already able to satisfy the code's requirements. To estimate depreciation, useful life should be determined by individuals with relevant experience and expertise, with the advice of accountants, about the level of accuracy and the amount of disaggregation that might be required. I'll move slightly onto the bulletin and not the consultation, but it contains an illustration of how weighted averages might be calculated. Authorities might be able to identify alternative approaches to this that will still satisfy the code requirements in line with their own local circumstance. The guidance is not intended to be prescriptive or set a minimum expectation of the work required. It will hopefully be the case that it will reinforce your current approaches. It would be reasonable to use parts of the highways network asset which were defined in the Code of Practice of the Highways Network Asset, i.e. talked about them earlier on, but carriageways, footways, cycle tracks, structures, street lighting, street furniture, and traffic management systems. The examples present information where local authority has information on gross historical costs for different parts of the highways network, or may be able to estimate it on a reasonable basis. So local authorities may not have this information, but they may be able to estimate GAC for a specific part of infrastructure assets. This may need to be made by potentially using current costs and using indices to reflect the average age, for example, of street furniture, in which case the authority will seek to rely on the evidence of appropriate professional experts or potentially on industry standard information. Alternatively, local authorities may wish to consider using the starting point as net book value and should use the remaining useful lives. Again, the latter may need to be estimated, and such estimates might group different parts of the asset. This bulletin is not, as I said, I'm trying to underline this, intended to be prescriptive regarding the methodology for calculating depreciation, but to show possible approaches which could provide a reasonable estimate. It is the case that there might be other methodologies, and local authorities will need to take decisions for themselves. When local authority highways networks are in a relatively heady state, it might be possible to calculate multipliers on a periodic basis. And evidence might be needed to make sure that they are updated with appropriate regularity. And this might only be the case, for example, if spending patterns across components change significantly. Alternatively, the authorities might have to calculate these multipliers annually. Note that the minimum requirement will be to review useful lives and depreciation methods at least at the financial year end. So multipliers can't just be carried forward from previous years without sufficient consideration as to whether or not they are suitable for demonstration of the pattern of consumption or future economic benefits or service potential. As a reason for an important part of the development is we are trying to work with highways experts to attempt to validate what might be reasonable estimates of useful lives, and we'll hopefully bring those forward in the final bulletin. We're almost ready to issue the bulletin, but decided at the recent Accounting and Financial Reporting Forum that a more simplified approach might be better to fit with local authorities' approaches themselves, but should be able to be brought forward early next week. For all of the estimations, it is likely that local authorities will need to provide evidence of their estimation processes and why they have made appropriate, reasonable assumptions that are materially accurate. And in terms of disclosures, the adaptation in relation to the recognition provisions confirms that the adjustment of the carrying value is zero where replacement expenditure based on where there is replacement expenditure based on the assumption that the asset is worn out, and average depreciation across the network is effective. However, it is understood to be the case that the derecognition transactions for large number of authorities have not taken place for the reporting of gross historical cost and accumulated depreciation. Or if they have been made, it must have been on an uncertain basis. These amounts will then increase until they are materially overstated. This added to the information deficits have meant that this information is less useful, as discussed earlier. So the temporary solution in the code is to remove the requirement in IAS 16 via an adaptation for property, plant and equipment to disclose gross historical cost and accumulated depreciation. This will not need a separate line in your balance sheet unless you already have separate lines for each of your categories of property, plant, and equipment. Instead, it might require a separate section of the property, plant, and equipment note, which reports in infrastructure assets separately, with a reconciling note to the balance sheet value for property, plant, and equipment. There might be an alternative which isn't featured in the bulletin, but you might want to consider just including blanks or shaded areas for gross historical costs or accumulated depreciation information in your current property, plant, and equipment note. So moving on to the guidance, which, as I said, will hopefully be issued early next week. I have mentioned the bulletin at numerous points throughout the webinar. The slide sets out the areas in the bulletin, which includes the following topics. Sets of the background, much as which I've discussed today. Materiality has been included because this will be very important when you're looking at such a large asset, and it uses as its starting point the guidance provided on the high-res network asset. There's also provisions on derecognition and accounting policies, depreciation and disclosure. I've discussed depreciation and disclosure, but there is a worked illustration for these and example accounting policies. We are taking the very unusual step of issuing draft guidance, draft bulletin 11 for infrastructure assets. And we're doing this because we would value accounts preparers and other stakeholders' views on the guidance before it is finalized. It's in draft, but the task and finish group are currently confident that it will be reasonable and in accordance with the code, but it is not yet formal CIPFA guidance. So CIPFA is to finalize and home in on the final guidance. We're looking for whether there are any missing areas, whether the assumptions made in the bulletin around the availability of information is reliable and reasonable. Are there any areas where more guidance could be done? Are there any areas where there can be more exemplification, more examples? And do you have any examples yourself which you consider might be useful for other local authorities? We would be immensely grateful for any of those things. And as I said, we anticipate issuing that imminently. So as a temporary proposal, you can imagine this is not the final position. We intend to examine further task and finish group proposals. We will look at including revisiting current value as an option, because actually what does resolve most of these issues is moving to a depreciated replacement cost mode. Not saying that that's where it's definitely going to go, but it would actually answer many of the questions raised. Consultation itself might bring forward other options, so we welcome any that you have. And we will look at all options in proposing a longer-term solution. In addition, of course, there are other infrastructure assets, and what we'd be very interested in is whether these arise and similar problems arise, and do you need more guidance on other infrastructure assets? So what are the next steps? As you'd imagine, we issued for consultation on the 12th of May. This webinar is a part of the outreach with others and discussions with stakeholders. Consultation concludes on the 14th of June. Please send your responses in. We can only move forward with having good information. CIPFA will be able to consider initial outcomes on the 15th of June, but there's another meeting in place as well, because it's going to be a lot of information. And there's a FRAB meeting on the 30th of June. We hope there are other approval processes that the code has to go through. We hope to issue at the beginning of July 2022. So we're now more than happy to take any questions, and SIP for LASAC are very much looking forward to feedback from this webinar. Thank you, Chair. Apologies for the whistle-stop tour on a very complex issue. I hope you find it useful.
That's great, Sarah. Thanks very much indeed. It was a comprehensive run through, but hopefully people on the webinar will have a better understanding of the issue and the complexity of it. And I think, as Conrad said in his introductory remarks, it is important that we hear what the challenges are and get people's views on whether we think both interim solution and then sort of longer term work is the right way forward. I'll just maybe if I can pick, we've had a few questions in the question and answer session. The first one was about copying the slides. I take it, I'll just look at Sarah or Stephen. I assume that would be okay just to provide delegates with a copy of the slides and maybe even have them on the website.
Yeah.
Both know
we'll
that.
Put them. We have special pages for infrastructure assets on the SIPA website, and we'll load them on there so they're available for them. That's
great. Thanks very much. The next question was around about why the amnesty option had been disregarded. I wonder, maybe look to Conrad to reply to that one.
Yeah, sure. Thanks for that, Derek. I was just halfway through typing it, but you're right. It's much easier to say it, isn't it? I think that there's two issues with it, with an amnesty. I mean, firstly, obviously, state the obvious, an amnesty sort of makes the problem go away for a year or two, doesn't it? But I think there is a really important kind of long-term point for the sector here. If we just say, well, we'll just sort of completely ignore those accounting requirements, I do think it undermines our long-term credibility, with government and many other stakeholders, and I don't think that's something we should endorse. Far better, as in this case, where the issue arises with the code and the implications of it, that we go through this sort of approach to try and find, as Sarah set out, a short and a long-term fix. I think the other point that we're mindful of, and this is not to criticise individual authorities. I don't know of anywhere this is the case. But the trouble with an amnesty is it will solve the issue for those authorities that, if I could put it in these terms, have had a pretty decent go at it, have kept decent records, but come up against this problem. It will also provide an amnesty for authorities that frankly haven't maintained proper accounting and other records. And I just don't think we should be in the position of taking such a radical step as to condone any authorities that may be in that position. So I was pretty clear that we were right to avoid an amnesty and instead go down the approach that we have done.
Thanks, Conrad. Hopefully that answers the question, and thanks for posing it, because I think it is important that delegates understand some of the reasoning behind this. I think I'm just going to take the questions in order as they appear. So the next one is really going to the crux of some of the challenges that the group has faced. Is it fair to say that parts of infrastructures are really replaced before the part has been fully consumed? And there's a good example being given there about junctions in particular and how these can change with demographics or traffic flow issues. I think I'll look to the panel to see who wants to pick this up. My own view, in a sense, is some part of the difficulty that we've had in this, as Sarah said in her presentation, was to do with the historic information. My gut feeling is probably some more recent capital works. The records would be there to enable this to be done. But if you go back, the sort of pre-period that go back in history, as Sarah outlined, I think it's maybe more challenging to get the information there. And we've been trying to come up with a proposal that's reasonably simple to implement that people can sign up to. That doesn't mean it's perfect. And I think if authority does have more detailed information, there's nothing to stop them for following the code as it currently stands in that regard. Sarah, do you want to say some more?
Yeah, I mean, very specific that it's on average that is the case that it is the case that on average throughout the network, rather than on an individual part of the asset by asset basis. There will be occasions, I can't say that they're not, you've given me a very good example when they might be moved, but it's on average throughout the whole of the network asset, which is infrastructure assets that we're talking about. Probably when we move to a longer term system, then that will move to a rebuttable presumption. But because of the information deficits, we think we can't do that now, that it has to be an adaptation.
Okay, thanks, Sarah. I mean, if people want to, it's difficult with doing these questions. If people want to come back again, put something in the Q&A section. Just looking the next one, temporary solution to disclose the asset value net. I think from discussions we had, and I think it links into a question somebody else, that our audit firms on board with the proposals. The working group has had a number of auditors as part of the work, and part of trying to come up with a solution was to make sure that auditors were on board with what was being proposed. I think what came through the discussions where some of the auditors did not place a lot of confidence in the gross asset values and the cumulative depreciation values for this, and that was part of the challenge. They were more comfortable with using a net book value figure, and that's why we've put the proposal in the consultation. Again, Sarah, you want to?
Yeah. I can't, and until we get the consultation responses, I can't tell you that verbatim the auditor's confident with it. I think we have liaised with auditors both in the committee, but also meeting with the local government technical network, and I think it'll be subject to consultation responses, but they are aware of the issues, and hopefully aren't raising any very specific issues. There weren't any other suggestions, should we say, but of course they couldn't give their formal view because they will only be able to give their formal view as a part of the consultation responses. So they didn't seem to be raising any more questions on the issue, but I couldn't tell you with any absolute certainty until the consultation responses are in, when you get a firm-wide view from each of the firms.
Of course, what Sarah says is absolutely right, isn't it? But I mean, I think just to add to that, if I may, I mean, we've got pretty well established links with all of the main audit firms, some of whom I can see are on this call as well. So I think this is not something that's been designed in isolation. Again, I emphasise when I talk about the sector, I don't just mean local authorities and people working in them. I mean local authorities, I mean their auditors, regulators. I can see we've got PSA on the call, so that, to the maximum extent possible, this has been designed taking into account views from all the different players in there. Of course, Sarah's absolutely right that we'd need those formal views in response to the consultation.
Okay, thanks, Conrad and Sarah, for that. Just again, going down the list of a question about sea defence schemes, and it also links into a point from David Ellis, but to sharing feedback, not so much a question, but I think just making the point that there are audit challenges and other infrastructure assets. And I think certainly going forward, that's an area that we will need to look on as a group to see if there's other issues that we need to pick up on as well. Is any of the panelists wish to make a specific comment about that?
There is a possibility that the similar issues might apply, and sea defences are not surprising. So it will be useful if all stakeholders provide that response to the consultation. So, and particularly then on the consultation on the bulletin, any areas where we think that more guidance might need, but we don't know enough about what the problems might be yet until to provide either a consultation response or guidance on the issue.
Okay, fine. Sarah, I'm going to turn to you just to confirm, is this a change to the 2122 code? Could you explain the nature of what's been proposed and how that will be adapted for the code? Thanks.
It will apply from the move to the IFRS-based code in 2010-11 to make sure we've covered all opening balances up to the 22-23 code. So because we understand that accounts are open from a number of years for some authorities, so we have to apply to make sure opening balances are covered.
Yeah. Just sorry, I'm looking at this on my iPad, and it's difficult sometimes picking up the questions. A comment from Mark White, which is maybe linking up the question of looking at current value rather than historic costs, which I think you said in the presentation, Sarah, this might be the long-term solution. And I think from our discussions, it was discussing back in 2018 and been ruled out unpractical at that stage because of the cost. I think we just felt going forward it's possibly something that we had to revisit to see if there was some solution going down that route, which might probably be the ideal solution in many respects, purely in terms of addressing the concerns that have been raised as part of that.
It would address the information concerns, Chair, but it would be the cost issue probably hasn't been removed. So that's something we'd have to look at in significant detail.
Yeah.
And it wouldn't be, that wouldn't happen in say in a short term. I'm not saying it would happen at all, but that wouldn't happen, say, in the near codes. It would take, if we did decide that was the absolute only option and it provided all responses, that would take some time to implement if that was the only option that would resolve all the issues.
Yeah, and I think somebody has commented that about the question of there are enough valuers around the country who would be able to undertake an exercise, and that, which I think is a valid comment that we can pick up on in terms of when we get to looking at this. Is there a proposed approach for demonstrating the reasonableness of the useful life calculation for depreciation? I know that's something you've been looking at in terms of the bulletin to try to provide that guidance, and it's something the group have spoken about, whether there should be a standard approach or whether we'd still leave it to local authorities to make their own decisions, but with some broad framework in place that they could follow.
Yeah, Chair, we wouldn't be using a standard approach, but we are looking to test the reasonableness assumptions with highways experts, and so we might be able to set what we expect to be reasonable, useful lives. However, if there is a highways engineer which has different information, they are the people that know an individual authority's assets, and they are the experts and almost unchallengeable because they've worked with these assets for years and years. And so if there is, if they say, oh, well, most bridges last for 100 years, and therefore 100 years is a reasonable estimate. If their bridges are only there for 80 years and they have the evidence for that, then we wouldn't, that's not challengeable. That is what that expert thinks is reasonable based on years and years of knowledge to get to that position. Yeah. That's a fictitious example, but yes, we wouldn't impose any by no means, but we are looking to try and help local authorities by providing reasonableness behind the useful lives.
Yeah, that possibly links into comment by Julie Jewson. What do you mean by authorities not keeping proper records? Possibly use sort of Chatham House rules. I think the comments maybe come back from some comments that we've heard from auditors in the group of concerns over the quality, particularly of historical records within authorities, to be able to justify the figures that are appearing in the balance sheet. I think it's something to look for in guidance, Sarah, to sort of link to that previous point of what's available and what we would recommend.
I mean, it is our understanding from the information and from very knowledgeable people on the Task and Finish group. It's not our understanding, it is that absolutely we know to be the case. In 1994, there are historical information deficits, that assets were only transferred. The ones that are measured at modified historical costs, i.e. infrastructure assets, were only transferred at their undischarged capital amounts. So there's a clear, obvious information deficit there. And we understand that in a lot of cases where assets have been transferred as a result of local government reorganisation, that they've just been one big blob of carrying value, to excuse the technical expression, blob. And there's been no detail as to whether those bridges, structures, or anything else. And so highways authorities might not have that information because of valid reasons. And you have things like, corporate memories for these things that seem to disappear when authorities are transferred. So there just isn't information to back that up. So it's not a criticism, it's just reality. In two cases, there is a reality. There are significant information deficits.
Yeah, yeah. I think it's a question from Sean McEwen. What was the thinking behind moving away from the rebuttable presumption? And I think a concern that using something that replace components may be zero, more likely to be open to audit challenge.
Well, if there's an adaptation, that would be very difficult, because the adaptation will say that it is the case that it is the case, to excuse the expression. But the rebuttable presumption, because we understood that it was because of historical information that there was a lack of information to be able to be absolutely certain up until the date. In the future, I think we will be able to go to a rebuttable presumption, but not to date, so that we can move forward and to have a better position to start from.
I think there's somebody else commented. Yeah, I'll just come to. I think somebody else has commented about the word "may" has been of concern. So I guess, Stephen, I'll come to you, but I think that links into the previous point as well about the use of the word "may" be zero rather than something else. Stephen.
Yeah, can I, before Stephen does that, can I just say that that is a question in the consultation, and it's something we'd like feedback on, and so might be subject to change, because it's very much a consultation question and an area that we will be focusing on very deliberately throughout the consultation responses. Sorry, I'll pass on to Stephen.
Right, I think I'll just round up on what Sarah was saying around the rebuttable presumption, and say that that's the option, that's the approach that we would like to have used, but we found problems, and the auditors expressed concerns over the evidence base, and we've set this out in terms of maybe, but in some situations people will have better information that something else is the case, and that under those circumstances they can use their own better information. More generally, I would make the point that we've been talking to auditors in designing this, but that doesn't mean that we've got the perfect fix that auditors will accept, and that's why we're very keen to get feedback from auditors as to how this will best support them. But our hope is that the use of the adaptation, rather than it's sort of shortcutting areas of uncertainty, we are hoping that will make things acceptable for audit. It's not the sort of thing we would like to do. We would like to do a different approach, and in the longer term we will be investigating to see if we can get a better way around it. So does that answer the second question about May, Derek, do you think, as well? But I mean, the key point is we are asking the auditors as well as preparers.
Yeah, no, I think that's a fair point, and the point of a consultation is to get feedback from people if there is concern. But I think, you know, as you say, we have been working very closely with a range of auditors to make sure that they are comfortable with this as well. There's a couple of questions which are kind of similar themes. Somebody has asked, they say that some authorities have had their accounts signed off. How has this been possible? And there's a comment further down, but given the length of time covered by this, you means technically have incorrect audit opinions been issued for 28 years. I'm not sure who wants to, it's maybe a bit of a hospital pass to take that. It's difficult in a sense to comment. I can understand the frustration from practitioners that auditors have signed off accounts in previous years, and because somebody has now raised this issue, it's alerted to everybody else. I guess common practice or recurring practice doesn't necessarily mean it's correct as such. And I think now that the question has been raised, it's clear that we have to find a solution. I think we're aware of the caveats that auditors place in their audit opinions. In any case, I don't know if anybody else wishes to pick up on that. I think I can understand the frustration that's probably behind the questions that people have been doing things for years and it's not been challenged. Why is it suddenly deemed to be wrong? But we are where we are with it, and I think trying to look at it objectively, I think the challenge that have been placed just now are probably reasonable challenges to make in the context of what the code requires. Anybody else wish to comment on that from the panel?
I think you've set it out right, Derek. I mean, like you, I can completely understand where the question is probably coming from. But exactly as you say, the important thing, the issue has now been identified. Let's work together and find a solution that is pragmatic and reasonable and works for everybody. Is where the focus should be. But I completely agree with you. I understand where the question is coming from.
Yeah, thanks, John. So just a quick question. We're obviously talking with changes to 21-22 code and the retrospective nature of that. Will it delay the 22-23 code production?
No, it's been set aside, and it will. The amendment will also amend the 22-23 code separately. We've taken it aside so we don't delay that production.
Yeah, that's what I thought. There's a technical question: how do you see the weighted average depreciation working when we're talking about a single network asset? Do you want to pick up on that?
There are parts of that asset that might have different depreciable lives. It is relevant to use whatever information you have based on useful lives. For example, just use, and of course, gross historical cost to make sure you've got the right elements of it. So you have 25 years for carriageways, surface park carriageways, 100 years for bridges, 40 years for street lighting. I can't remember them all. And against their relative expenditure, they would be weighted, and you bring them together in a weighted approach. There might be even more detailed weightings if you have that information, but it allows you to do it in that sort of amalgam.
Yeah. Okay, thanks. Any expectation to restate accounts?
You can't, because if we're talking, unless there are errors, then that would be different. But we're talking about depreciation here, so depreciation is always change prospectively.
Thanks. Somebody asked, can we give examples of evidence that could support a straight line basis? I think it probably links to the comments you made earlier, Sarah, about being up to each authority to consider the most appropriate basis of depreciation.
I think, bearing in mind the size of the assets and the sensitivity that you can't apply because they're so big, that straight line would be reasonable, because it is only an estimate. I say only, estimates are very important to accountants. I don't take that under advisement, but unless you have something which is based on the current valuation, and then you're looking at the survey to measure how much has been depreciated, it is very difficult to use any other approach. But there may be arguments for reducing balance, but I can't imagine what they'd be.
Yeah. Okay, there's a couple of questions I kind of comment there. Something the group were very conscious of, to be aware of any unintended consequences of the proposals. So there's an example here about flooding impacting an area of highway and the need for remedial work, that there'd be no need for an impairment as the value would assume to be zero. I would have thought, I assume we're talking here where the value of the work would be capitalised and then possibly immediately written off as not adding to the value of the asset. But I think it's helpful to have these kind of worked examples so we can pick up on that.
Yeah, if they can, examples like that will be looked at when we bring in the formalised guidance.
Yeah, somebody's questioned the relationship to MRP. Again, I think we'll pick that up as a sort of working group to take forward. Anthony Hicks, what's meant by undischarged capital amount? The option. Oh, to be so young that you don't remember these things, Anthony. I think it just means the debt that's still outstanding on the original capital expenditure. Somebody says, I have a detailed conversation with head of highways. Yeah, just highlight, I suppose, the very nature of the different components. And I know that Sarah's been in consultation with the appropriate professional groups within highways to sort of get their input into the guidance that we're trying to produce, because I'm well aware that engineers probably have a completely different view of life to accountants when it comes to looking at roads. It is something we are looking at as part of the working group, and that will form part of maybe guidance as it starts to develop.
Yeah, just to note that a high-risk engineer, well, I think Conrad wants to.
No, I was merely going to apologise. I really have something urgent I need to deal with. Not that this isn't urgent, but back at the ranch at home. So thanks everyone for attending.
No, it's okay. Thanks.
And Sarah and Stephen.
I think there's a couple of technical questions now. Yeah, I think the frustration that it wasn't reviewed a few years ago, why is it an issue now? And I think we've explained that it's because it's been raised by audit. Concern about the kind, that's linking to the comment about getting current valuations. I think that's something we need to be acutely aware of, that there needs to be a sort of value in what we do. Don't think we're talking of prior period adjustments. That comment's been answered already. Timescale, that was set out, Sarah, in your sort of final slide.
14th of June.
Until it goes through the sort of governance program, I don't think people can assume that this will be agreed. So I'm conscious that that does cause difficulty to people trying to finalise their 21-22 accounts.
Yeah, we're doing our best to work as fast as we can within the limits of what we can do in terms of references, etc.
Yeah, and I think the last question we've got there, hopefully, I think it illustrates there are different practices and different authorities. I think we have recognised that some authorities are fully compliant as far as we can gather with the code, but probably the majority aren't, which is why we're trying to look at this. And I guess as the guidance comes out, it will allow others to probably get up to the level that some are already operating at. And I think that's been one of the challenges of the working group in terms of trying to find a solution, because it's difficult if you can point an example of an authority who does appear to be fully compliant with the code as its current stand. It is difficult then to come up with a proposal that deals with the majority of councils, but it doesn't diminish the efforts of these councils that are complying. I'm hoping that's covered all the questions in the forum, and I'm also conscious that we're just slightly over time now. Can I maybe just draw things to a close by thanking our panelists and thanking everybody for their participation. I think the numbers, as Conrad suggested, illustrates the interest in this topic, and rest assured that we are trying to get a solution that will enable us to move forward and get accounts signed off. Can I just maybe close by encouraging everybody, either individual or authority, to reply to the consultation. I know from the past, it's the more responses that come in, the more assurance that the working group can get that we're on the right lines and trying to get a solution to this. So please do respond to the consultation. And with that, I'll bring this webinar to a close. Thank you very much indeed.